Hello, Titus. I'm doing fine. Maybe yourself? Okay. So I think we can finalize on account opening by today. And then I think also my documents are also ready. So I'll say all the contracts, right? They are around 2 for the account and also for the office. Then I'm also going to send you the corporate application form. Yeah, so that we can be able to get started on the first account. This one who was doing the 7 million. Okay, so give me like a few. I'm entering a class, then I'll call you. All right, so thank you so much. Okay, good day. Bye. Okay, enough you. Hey guys, sorry. Been very busy. It's been a crazy busy week for me. So let's get started for our class. So last time we did a little support and resistance. No, what did we do? Let me check. So guys, just a few. I hope you're all on the WhatsApp group. So just a minute. What did we do last time? I sent a link. We did. We have to keep track because I have a manual. I'll send you, and I also have so many materials. I think I sent you. Oh, we did candlesticks. Yeah, I remember. No. Oh, for the online, we did introduction to forex trading. Okay, good. So today I'm going to start you guys. I also sent some materials on candlesticks. So I'm going to combine candlesticks today and support and resistance. And today I'm also going to explain to you guys. I hope I'm visible. Guys, I hope I'm visible. So in case I'm not, you can always leave a chat. Let me open my screen. So a minute, guys, so that we started. It won't take long. So just give me a few of your 40 minutes or 30. I won't take long because of time. Yeah, I think I got it. So I'm going to help you understand candlesticks. So we are today I'm mostly going to deal on candlesticks and candlestick trading, combining it with support and resistance. So let me share my screen. So a minute, guys. So today, because I've realized this is very, very important and most people are not able to really understand how that works. So give me a minute. Let me share my screen. Where do you share the screen? Oh, here. Okay. Share. So here we are. So I was on Bloomberg. So just a minute. Ouch. Okay, so let's start, guys. I'm trying to get my link here. We go to baby pips. So I'm going to just use baby pips for today, but I have the materials. I believe I've sent you so many books online. So let's dig deep. It's been a very profitable week. So I've been trading mostly gold and the euro, and also I've been trading the pound. So, but I'm going to go to that later. So today I just want to deal with this. These are what we call candlesticks. Whatever you're seeing moving up and down, or basically being able to read price action using candlesticks. So that's what I'm going to be teaching you guys today. So pay attention. I won't take much time, but it will be very, very important. So let me first go to then we are going to touch a little bit of the practical. So today is candlestick charting or reading price action. That's what we'll be doing, reading price action using candlesticks. Reading price using candlestick, or reading price action using candlestick trading or candlestick charts, candlestick charting and support and resistance. Candlestick charts plus SNR. Okay, so I think that's what we'll be doing today. So let's go directly to our e-learning site. We said they have very good notes, baby pips. So I think guys, you can always have a look at them and what they do. So let's have a look. And then at least we see what to do for today. So just a minute, guys. And then in case you have questions, you can always ask. So let's go and dig directly. So I think, no, we had not done support and resistance. So let me explain. So we have said reading price action using candlestick charts plus SNR. We have missed a class. So that's why I need us to cover at least two things today. Support and resistance, here it is. And I'm also going to touch on the candlestick. So that on Tuesday, we will do Fibonacci and reading Fibonacci trading. So here, this is support and resistance. So under support and resistance, there isn't much. It's all about price action. So let me close some of this. Okay, let's do this. So what it is, it's one of the most widely used concepts in trading. So it's very, very important because for you to learn to trade, you really need to understand support and resistance, or you really need to understand how support and resistance works. So if you understand how support and resistance works, then you'll be always very, very, very profitable in this business. So it's one of the most widely used concepts. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. So it looks like this. So market usually moves up, then retraces back down. So this down point is usually called support and upside is called resistance. Then it will go up again, then form down like a line like this. So this becomes our resistance, then this becomes our support, and so forth and so forth. So when the price moves up and then pulls back, the highest point reached before you pull back is resistance. So resistance levels indicate where there will be a surplus of sellers. And the price continues up and again, the lowest point is support. Support levels indicate where there will be a surplus of buyers. So as I was saying, we are looking at where there is buyers or sellers, or surplus of buyers or sellers. It usually happens around the support or resistant areas. Let's keep going. So there's something called trade the bounce. This is when buy the price when the price falls towards support, or sell when the price rises towards resistance. Then we have the break. Break now, it will break either through the resistance or the support. So you're buying when the price breaks through resistance, or you're selling when the price breaks through support. So let me show you. So you can see this is one example. This is our support. The lowest point the market reaches and it can go further down. That's what we will call support. Then the highest point the market reaches up without being able to break up again is what we are going to call resistance. So you can see this becomes our strong support down here. Let's keep going. So to help you filter out these four breakers, you should think of support and resistance more as zones rather than concrete numbers. So let's give me a minute. I'm having so many ads here. Okay, let's just keep going. So one way to help you find those is to plot support and resistance on a line chart rather than a candlestick chart. The reason that is that line charts only show you closing price while candlesticks add extreme highs and lows. So these highs and lows can be misleading. So in plotting support and resistance, you don't want the reflexes of the market. You only want to plot the intentional movements. So give me guys a little bit. I want to see what I have on my notes on support and resistance. So just 1 minute. It's here. So basically we are looking at support and resistance as zones. So you can see resistance zones and also support zones. So all you need to know about, yeah, it looks like this. You can see we have a major resistance. If it's tested many times by candles, becomes a major resistance. You can also see a strong support because there were very, very many candles down here. So then the market pulls up, then comes back. You can see now we have minor resistance, sometimes becomes minor support. So you can see minor resistance, goes up, down, down again, up, down. Then now market went all the way up, down, like that, minor support and so forth. So that is what basically, so now the bounce will be either it breaks and then goes back up. That's what called the bounce. So you can use trend line, support and resistance. So let's have a look. So trend lines, they're plotted like this. So let's go to practicals. So just a minute, I'm still waiting for this to open. Oh, it's here. So this is our manual, which we usually use. So Bernardine admit. So we are still going on. So let me see what we have on our manual on support and resistance. Just a minute, guys. So it's down here. So just, oh yeah, it's here. Trending market, consolidating market. So just a minute, I see if I'll get it. This is fundamentals, trade balance, and the rest. Yeah, it's here. So this is the graph I wanted us to check. So you can see this becomes our support, our resistance, then this becomes our support. So the idea with support and resistance, they are levels. And sometimes you'll find they are specific prices. So basically that's what I wanted you to see. So let's keep going. So 1 minute. Yeah, so we're saying trend line. So look at this trend line, for example. Oh, sorry. Sorry, guys, about that. Yeah, so at trend lines. So how do you draw the trend lines? So they look like this. You can see. So when the trend is going up, most likely it will go up on a wavy line. So a line that you're going to draw down here, now this becomes our support. So every time the price hits here, goes up, then hits back here, goes up, then hits back here. This now becomes our trend line. And then when the market is going down, every time the price hits here, then goes back, hits here. Now this becomes resistance. So you can see the line looks like this, just the way that wavy is looking. So this is the trend line. So it can also act as our support or resistance. Let's keep going. How do you draw the trend line? So let me show you guys how to draw the trend line. I hope you have your MT4 with you there. So this is my chart. Yeah, I think Bruno, welcome. So let me open an open chart, a naked chart, like, yeah, like, no, let's not do US 500. Let's do this one. Yeah, this is a naked chart. This is USD chef. So I want to draw trend lines on USD chef. So this is the line. You can see it here on the MT4. I'll draw line. So there is one trend line I can see around here. Here, this is a trend line. Then I can also see another one around here. So this becomes a channel. We call it a channel. Let me draw it well. So you have to see the points up to when it broke. So it was around this area. So sometimes they'll go out and above.
I think, excuse, a question. I think I can't see where you're drawing.
Oh, you can see. Okay, let me zoom in. What about now? Can you see the screen?
Oh, yes, yes. Now I can see.
Yeah. I'm showing you the trend line, how you draw them. So this was a good trend line, though this pair is ranging because I'm on the 1 hour chart, because dollar seems to be strong and Swiss franc seems to be strong. So I want to draw another one also. There's another one here I can see. Can you guys see? There's another small one here. Then let me also draw. No. This pair is not good. Let me get a trending pair like Euro Yen, so that I can be able to show you how to draw the trend line very well. So let me get Euro Yen. Euro Yen really trends a lot. So give me a minute, guys. Yeah, it's here, Euro Yen. Yeah, you can see this is far much better. Yeah, nice. So let's draw a trend line on this one. I can see a good one from all the way here. So this is a good one. Look at the trend line. You can see, guys, huh? That's a good trend line. Let me move it around there. So you can see every time the market, just a minute. Around there, yeah, this is a very good trend line. So that's how you draw a trend line. So because you can see when it breaks here, this was where you could have, this is now what we call a breakout. Because now you see the market kind of tried to break the trend line, went back up, but it seems to be going back up again. And then if I add another trend line, say here, it becomes now a channel. We call it a channel around there. So I love this pair. It's a good pair because it trends a lot. The euro is strong because of the eurozone around there. Yeah, I think that's good. That's very good. This is on Euro Yen daily chart. So it seems to be really gaining, because now you can even see on the oscillator and the RSI, we are really moving up, because now demand is high on the eurozone because people want to go back to work. There's a hybrid model, vaccines are working, and things like that. So this is on the Euro Yen. So let me go back to my notes. So at least trend lines and channels, I've shown you how to draw them. Now I'm going to use both of the trend lines and channel now to draw support or channels I've shown you. So channels is when you're drawing two trend lines. So I'll just show, I'm going to show you with a minute. I think my internet is down. Oh, it's back. So I'm going to show you with also the same Euro Yen. So now I've already drawn my support and resistance area. So I'm going to zoom out. So you can see the lines I've drawn here. This now becomes my major support and resistance areas. There's also another one up here. So this line, horizontal line, if I draw it up here, now this becomes my major resistance up here. Let me move it around there. So for me, I usually look at support and resistance as prices and or as zones. So you can see if I zoom in now, I'm also going to add something else we call separators. These separators are important because you right click, then you say common, then you click on show separators. They're very important because they're able to show you up to where you want to hold your trade. You can see now there was also another trend line here going down. Let me now draw this one for going down. You can see this is another trend line and it has been broken. That's another trend line. Let me add also another one on this other end. So you can see this one seems to have been broken. So you could have gotten a good buy around this area. This is what we call the break, because now it broke. Then the bounce is like this one. It goes down, then comes up, then goes down again. So this is a very good pair. If you're starting trading, I would really recommend you can start with Euro USD or Euro Yen, because it's not very risky. So you can be making small monies consistently over a long period of time. So that is the channel. So at least I've shown you the channel. So now we are going to go to, let's do the summary of the support and resistance so that I introduce you to candlesticks. This is what I really wanted us to do today because support and resistance is not hard. It's very easy. Welcome, Lucy. So at least today I can see we are many. So we said we'll be doing more of practical. So always have your MT4 with you, whether you're using the phone or the computer. So for me, I just touch a little bit of the theory, then I touch the practice, because we don't usually have a lot of match time with you, but at least I can always get a one-on-one, even on Friday, every afternoon. We always have a session, especially when we have a lot of news trading. So let's go back to a little recap of support and resistance, trading support and resistance. So one thing to remember is that support and resistance levels are usually not exact numbers. To help you filter, you need to see them as zones. So those zones, mostly you see the market consolidating. Let me use 4-hour chart, for example. So if I use 4-hour chart, then I zoom out just a little. This point here, you can see, now this is our consolidation. And you can see here is when the market broke out on this trend line and went up. So the reason I use H4 D1 is so that I can be able to get the direction, so that I can be able to get the direction of the market. So it's usually far much easier. So let's finalize on support and resistance. So another thing to remember is that when price passes through a resistance level, that resistance could potentially become a support. So you can see it goes up, then comes back. It does a retest. We call this a retest because price tried to come back to support, tried to test this support, but it couldn't. So it either will break this way or will break going up. So that's what you call. So that could also happen if a support level is broken. It could potentially become a resistance. Look at this now. This was a breakdown. Then it did a retest. So it did not go back, but actually, so this now is what we call a bounce. You see, it went then, and then this is now what we call a break. If it breaks through, so why we're calling it a break. So then the trend lines, I think I've shown you, they look like this. I've also shown you the channels. We have uptrend, a downtrend, lower highs, higher lows, then sideways or trendless. We also have flat. Sometimes the market could be flat. We don't have money or there isn't much we are making. So that is to mean if we don't have much money, there isn't much volatility. So mostly you'll happen to see flat movements on consolidating markets. So I think this is good channel. I've shown you how to draw one. So how do you trade? So for support and resistance, mostly I'm going to show you how to trade the break or the bounce. So for today, remember the break or the bounce as I introduce you to support and resistance. So this is the break. You can see here. Now this was a break. And then this pullback now, this is the bounce. You can see it broke, went back, then bounced back down. That was a very good sell order. So let's finalize on support and resistance. So remember, we have zones, trend lines, and channels. So at the other class, I'll introduce you to moving averages. But for today, let's just do support and resistance. And also let's do candlesticks. So let me go now to candlestick charting, because candlestick is what I really wanted us to touch today. So this is one of the most, I know most of you traders or those who are trading, you really love candlestick. Candlestick is what we see here. So whatever you can see on this chart, whatever this thing you can see, this is what we are calling the candlestick. So these are candles. So we'll get to know their names right now in a few. Then apart from knowing their names, we'll be able to understand the psychological aspect of what this candle is all about. So let me go back so that I'll also show you with the same euro yen, but now I'm going to use the weekly chart or daily chart or 4-hour chart or 1-hour chart. Let's see where there are more candles. So I'll zoom out. So I think I'll use the 4-hour and the daily. Yeah, this is better because I can see the candles here. You can see these candles. So I'll help you understand the psychological aspect of what these candles are all about. So let me do that in the next few minutes. So let's understand what is a candlestick. Number one, we briefly covered Japanese candlestick charting. So there's a guy called Munehisa Homer. So this is the guy who discovered the candlesticks. So let me show you guys the guy. So you can check him out around 300 years ago. So just Google there. If you are having your internet, Google Munehisa Homer. So it was around 311 years ago. This was the guy, you can see him. So once you Google that, this guy made over $10 billion in his lifetime, almost 3 centuries ago, but he was purely using candlesticks. So let's see how candlestick became what they are today and why they are so important. So give me a minute, we open this. So I hope you guys can see. Yeah, there we are. So this was the guy, was a rice merchant from Sakata, Japan, traded in the Dojima rice market, Osaka. He's sometimes, sorry, let me share. Yeah, there we are. So let's follow, guys. So he is sometimes considered to be the father of the candlestick chart. So we give all credit to him when it comes to candlesticks. And also, it's also a form of technical analysis that is used in the stock market. So candlesticks are very, very important. So around 1710, a futures market emerged, which had previously been traded exclusively on the spot. This system used coupons promising delivery of rice or at a future time. From this, a secondary market, a coupon trading merged where he flourished. He claimed to have established a network of about 6 kilometers between Sakata and Osaka. It was a distance of 600 kilometers just to communicate the market prices. Then he wrote The Fountain of Gold, the Monkey Record, the first book on market psychology. So this is very, very important because now this is where you're able to understand the psychological aspect of how the market is working. In this he claims the psychological aspect of the market is critical to trading success and that the trader's emotions have a significant influence on rice prices. So which is very important. The emotions, they really play a big role. So even right now, he notes that recognizing this can enable one to take a position against the market when all are bearish. So when we are saying bearish, we mean they are going down. Bears are sellers and bullish, they are buyers. So he described the rotation of a yang bull market, a yin bear market, and claims that within each type of market is an instance of the other type. He appears to have used weather and market volume. So what he used was weather and market volume as well as price in adapting the trading positions. So anyway, I just wanted us to have a look at him. Then now I'm going to go to the candlesticks themselves. So I don't have much time. So I'm going to go to the type of the candlestick right now, because I'll just show you a summary. Now let's do the cheat sheet first, because this is the most important. So on the cheat sheet, I'm just going to show you the various candlesticks we have and basically how they are able to, yeah, here they are. So let's have a look. So we have, just get the name and how it looks like and what it does in the market. So this is a neutral. It looks like this is a spinning top. And then we also have a doji. So this represents indecision. So you can see neutral. Neutral means we are not going up or down. Then we have a marbozu, bullish. Of course, the psychological aspect is the market is going up. And also it does not have anything. You can see it does not have any. So before we go that, let me show you guys something. I wanted us to also check the anatomy of a candlestick, this one. So let's have a look at it. Then we see the various candles, and then we are able to see how they are applied in the market. So the next few minutes. So they look like this. So the longer the body, so this is the most important thing. If you're not going to get anything, at least understand the longer the body, the more intense. So just a minute. So the longer the body, the more intense the buying or selling pressure. This means that either buyers or sellers were stronger and took control. So that is to mean if the body is longer, we have more buying or selling pressure. So you can see how they look like. So we have short bodies. Short bodies are like these ones. These ones are small. So this is to mean short bodies imply very little buying or selling activity. So means bulls mean buyers, bears mean sellers. So long white means strong buying pressure. So when you see the candle is long, that is to mean whether it's going up or down, there's strong buying or selling pressure. This indicates prices increased considerably from the open to close and buyers were aggressive. In other words, the bulls were kicking the bears' butts big time. So you also have mysterious shadows. Just a minute. So if a Japanese candlestick has a long upper shadow, this is important, those spikes you see, or a short lower shadow, this means that buyers flex their muscles and bid prices higher. Especially you will see this on gold. You will see a big spike then the shadow is longer than the body. But for one reason, sellers came in and drove the prices back down. So at least that one you know. So let's now go to the basics. So on the basics now, I'm just going to show you the examples because of our time. At least you know either it's longer or short. So here they are. So we also have, this is the spike I was talking about. So this is to mean that the sellers push the price up. I mean, then the buyers flex back the price up. So this spike is to mean the buyers took control. Same case with this one. This is called a hanging man. So you have a hanging man. So the market was going up, then came down. You have an inverted hammer, up, was going down, then went up. So on these candlesticks, we have a manual. I'm going to send you, or I'm going to give it to you on the Nini. We have an engulfing. That is to mean the candle opened the same point. The closing candle of this bear was the opening candle of the buyers. So this to mean there was a reversal. So for you to understand candlesticks, because this one you'll have to keep doing it over and over again. You have tweezer tops and tweezer bottoms. This one, just always check the time frame number one you're using. This is called the morning star. Now this, look, there was a strong seller, then there was an indecision followed by a strong bull candle. So what does that mean? This is to mean that, of course, there was a reversal. If it's bearish, there was a strong buyer, there was an indecision, this is a doji, then followed by a bear candle. This is of course to mean there was a sell. So let me go now to the chart, 3 inside up and the rest. So how do you use them with support and resistance? So let's look at how you use candlesticks with support and resistance so that I'll be able to show you how we are able to use them. So let me go to the chart. Do we have the chart? So now on the chart, I have 3 things. So you can see, this is what I was talking about. Let me zoom in. This is a good case example. You can see this was more of a hammer. So this now, immediately you wait for confirmation of the next candle. You can see the next candle was a long bull. And this is now what has caused this market to go up. Because you can see from here, I think it has gone up to 227 pips. So when you're trading this pair, it's very volatile. So this one, you can see it's trending. Just a minute. Let me zoom in. Yeah, you can see it's trending. So this pair moves very fast. So for the candlesticks, the idea is to understand, number one, support and resistance areas. Let me use D1 again, because at least D1, I can see my support and resistance area. So there was a support here. I hope you guys can see there was a support here because this one was tested around 1-2 times. Then this was the 3rd time, market almost broke, but what did it do? Exactly at the trend line, that's when the market started going up. So this can be a good long. So if you're going long, I think we can wait for it up to around here because this one is going up. Yeah, this would be a lot, 343 pips. So this one, I'll have to wait it now up to around here. So I usually trade mostly because the idea with trend trading, I need to make more money with less effort. So this Euro yen is a good one. So I want you to see, look again, there were dojis for this sell to have come down. You can see the candles here. You can see there was a doji here, consolidation, and then you could have gotten a big sell here from here up to around here. This was around 579 pips. So what you do is very, very simple. For me, I'll give you a simple example. Always check the candlesticks at the support and resistance areas. Yeah, we have question. What do you look for before placing support and resistance areas? I look for previous trend and consolidation. So there was a question here. Frames work better. So this is a good question. So I think I've answered it. So for support and resistance, if you're day trading, I'd rather you use H4 and then zoom out a little bit. You see, when I zoom out, now you can see, I can see my main support. Guys can see this is my main support down here. Let me add another line. So this is my support. This is my zoom. So I've zoomed out all the way. Let me show you guys. I've zoomed out all the way there. So that becomes now my main support. Then let me also show you this other one. So I'm still on Euro Yen. So then you can also check the date. This is since 16th February. So at least that one you can see. So you can, then I'm also going to draw my main. Yeah, so now this becomes my main up to around here. Then this one, we move it up to there. So now this becomes my, we have to have, number one, you need to have the main support, then the main resistance. So once you have the main support, then the main resistance. So this now becomes my major resistance. This becomes my major support. Then in between, you're also going to see more support and resistance. Like here I can see. So for you to understand support and resistance, all you need to know, check how many times it has been retested. So then now I'm going to zoom in. So you check how many times. If it's retested more times, especially on the longer time frame. Look at D1 now. So this is a strong. This was our very strong because it was retested 1, 2, 3. If it's retested more than 2 to 3 times, now it becomes valid to be a support. Same case with the resistance up there. So do we have any questions? So I'm going to send you more materials because for candlesticks, I cannot literally tell you everything, but at least I've shown you the doji. We also have dragonfly and a marubozu. I've also shown you if it's longer, that means psychologically there's more buying or selling pressure. So let's link up on Tuesday. So I'm going to send you more materials. So check the WhatsApp group right now so that at least I give you an assignment for the weekend. So thanks, guys. Do you have any more questions? So I'll be following up on each and every one of you so that I'll be able to see how you've been trading. But meanwhile, at least you can be able to draw a trend line today. And then you can also be able to draw support and resistance, this one. So I think for today, let me stop the class at that. Unless you have any other question,